Hey folks, it's Vic Noble here with your weekly trade example for the week ending January the 10th of 2014. Some people have asked me, what would be an ideal trade setup? What would you want to see? And so I thought I might go through that for this week and show you what I consider to be an ideal trade setup. It's on the Australia-US dollar pair. And let me explain what I mean by ideal. It's when all the key factors line up at once, and those are things like the daily, a day trade that's in alignment with the higher time frame trend bias. It's a trend trade. And listen, reversals can be awesome trades too, but the easier way, especially when you're learning, is to trade the trend. I'd look for a pattern number 6. It's a simple pattern. It's explained in the RFP course, also known as a Vic trade, which is specifically used for capturing the trend of the day. I'd look for a key level of support resistance being hit on a higher level time frame chart. That's very important. I'd also look for a confirming slingshot or a MOF. And I'd also look for a trade that's in alignment with the bigger picture fundamentals. So what I'd like to do is show you just such a trade that's set up during the Asian session on the Australia-US dollar pair. Actually, you know what? The best thing I like about this trade is it was taken by one of our Coaches Corner members. He found it. He identified it. It was Mike. And I'm telling you that because I want you to know that this stuff is very teachable. Very learnable. So, and Mike has been picking these trades up so nicely, and I'm really impressed with his commitment to finding and taking these trades. So let's look more closely at this trade here. So for the daily trend bias, look at the daily chart, and see this pair has a daily trend bias that's down, and a very simple way to determine the daily trend bias is just this red line is an 8-period exponential moving average. It's on the daily chart. And if price is closing, it's real simple. If price is closing below it, like here, see price is closing below, your bias is to sell the next day, not buy. Okay? And it doesn't mean there's going to be a trade necessarily, but you're looking for a pattern to sell. And same here. Like look at right here when price is above it. Do you think selling would have been a good idea in here? It would have been terrible. So this keeps you generally on the right side of the equation. This idea is taken from a book written by Josh Lukeman called The Market Maker's Edge. I'd also want to see that price is at a key level of resistance on a higher time frame, because the ideal place to try to sell is at resistance, right? Sell the rallies in a downtrend, buy the dips in an uptrend, right? Well, Mike had this level marked off. He did this all on his own, by the way. Now here's a bunch of levels here, and this is going to look to some people like a real mess here. Believe me, if you learn how to trade off of these levels, you'll see some great benefit in it. It's not just a matter of having lines on your charts, it's how you use them, and it's very simple. He had these marked off. I highlighted this one. I made this one bold. It's at 89.14 or so. I took this is exactly the one that Mike had, because he saw that there was reactions at this level. See over here, it was support, and then it was resistance, and it was support, resistance, and so on all the way along here. And these create zones because, like, see all the support we had in here, and there's some wicks that dip below it, but it's a zone in here. Then when price dropped during the beginning of Asia and rallied again, there was a pattern 6 that set up in here perfectly. So he was all prepared, ready to see what would happen. Pattern 6, we take that off of the 1-hour chart. So here was the trade. Price came down. This black vertical line is where that's actually at 5 p.m. Eastern time, and now we start the Asian session, and now we're into Asia, beginning of Singapore, and Mike saw this setting up here as a perfect pattern number 6, which is exactly what it was. And this was taken, by the way, after the release of some red flag news. It was the Australian building approvals and retail sales. This trade was also a 30-minute slingshot, which is a great way to confirm the patterns. It just makes them that much stronger. And we teach slingshots and MOFs in the Coaches Corner as well. And I have some tutorials that will walk you through all the parameters and how they set up. So Mike took the trade short at 89.08. He only had a 12 pip stop on it, and he took his profit exactly where we show people in the RFP course where to get out. He got out right down here, which was perfect. He didn't get greedy. He didn't go for a home run. He just took his profit and ended up being a 2.5 to 1 reward to risk trade. That's just excellent, right? Just think about that. If you were risking, say you were risking 1% of your account on a trade, and you just made 2.5% on this one trade, Do you see why it's okay and such a good idea to be very, very picky about the trades that you take? You should always be picky about your trades. Why would you not? If all you got the entire week, just think about this. If all you got the entire week was 2.5% return, that's 10% in a month. And folks, those are just great, great returns. Yeah, people do better than that. Most people do way worse than that. So 10% in a month, I don't know a lot of people that would complain about that, especially when you're using such small leverage and keeping risk very tightly controlled. And by the way, I got another email from Mike last night with another profitable trade on this same pair. Once again, he just traded off the higher time frame support resistance level that he identified in advance. He waited for a pattern. He got a 1 hour MOF confirmation, and he took the trade. I just love it. Very, very gratifying for me to see that, and seeing so many Coaches Corner members getting ahead like that. So that's all I wanted to do, show you what the ideal setup looks like. I hope you found that helpful, and I'll be back at the end of next week with another weekly trade example. Have a great weekend.